All right, welcome to the Big Skinny with me, Lou Basenese. We're out of the heat of the summer into the cool of our Brooklyn studio, coming back to you after a brief hiatus. Everyone's got to take a break, and Dodman was out, so I took a day off. But listen, coming back on a historic day with you. S&P and Nasdaq close at all-time highs. I don't know, rewind a couple months ago, and everyone said, not possible. The world's going to end, and we were here, a voice into the deep void saying, keep buying, stay the course, and we've been vindicated. And folks, we're being vindicated even more. We've got a lot to cover today's show, including a couple of our stocks that are popping off. But before we do that, I want to welcome you, first-time listeners, repeat listeners, to the Big Skinny. And just in case you're wondering or forgot what we're all about, let me tell you. The Urban Dictionary defines the Big Skinny as insider information, and we're absolutely 100% uncategorically not that. I don't want to end up in a jail suit. I don't want to spend time making money in the markets, but this is what we will do and what we are about, providing you with the essential truths to help increase your bottom line. We're going to talk about that. We're making it happen. We've said in earlier episodes, if we fail to make you money, then we're failing for the reason to exist, and we shouldn't be here. But thankfully, we got a stay of execution. We got two stocks that are popping off. We're going to talk about that and give you two more stock picks, plus bring on a guest that's got even more stock picks for you. And we're going to break down the AI takeover boom, humanoid robots, and give you the patent angle on who's winning that race. Newsflash, it's not Tesla. Before we do that, I want to remind you, you can join the conversation at any time. We are live streaming on X, LinkedIn, and YouTube. Please don't forget to chime in. Prince A at the top. Where's Prince B? Any AI ETFs you recommend? No, actually, I don't. I don't think there's any good ones out there. I think they're just a mashup of Mag 7 and chip names, but maybe that's an opportunity for us to start our own AI ETF. But remember, great questions like that spawn great ideas. I think I got to write that one down. Please don't hesitate to join the conversation along the way. If you're a child of the 90s or 80s, it's a Choose Your Own Adventure podcast today, folks. You can direct where we're headed with your questions. But before we do that, you got to know our format. We always bring to you a rundown, three headlines that are three stories that are top of mind that you got to be careful about the headlines. Then we share one data point behind each to really focus you in on what matters. And then, of course, we share three investment insights. That's our model here. One headline that you should ignore, one chart that you should pay attention to, and one investment that you should make to make money. So with that being said, let's get to this week's rundown. Rocky never fails to get me fired up. AI, it's electric. That's something that never got me fired up. It's electric. The Electric Slide, the worst dance song ever created, next to maybe the Macarena. I still have trauma from being forced to do the Macarena in front of a school of 2,000 Filipino kids in the Philippines in Lucena back in high school. Gosh, the things we do for charitable causes and volunteer organizations. But that's not what we're all about here today. We're not up for charity yet. What we are talking about is the boom in AI, and we're hearing that, lo and behold, China is kicking our butt again, if you read the headlines. This coming out of Bloomberg Law, that over 100 DeepSeeks, remember, DeepSeek is the one that just shattered the market and the enthusiasm for US-based AI because they supposedly trained the model for a mere $5 million compared to the $100 million plus it's cost all the US AI players. Well, here's the thing. There's a lot of scuttlebutt going on that DeepSeeks are going to keep coming out. There's tons of innovation in China. And look, let's not go to the videotape. Let's go to the patents, folks. You know, one of our core principles here is the earliest indicator of profits is patents. And should we be scared? I mean, topping this list is China with almost 13,000 patents granted in the last 10 months of 2024. US pulling up second place, but a distant second at 8,600. Don't overreact. Quantity is not about quality. We know that all data and all patents coming out of China should be verified and scrutinized. And here's the key. How do you look at patents and know if they're valuable? Well, if other people cite them. It's like academic research. If other people mention your patents in their patent filings, you know you've invented something that matters. And that's what's happening in the US. The average US AI patent has been cited almost 14 times the average China AI patent, a measly 1.18 times. So that means the US patents are at least 7 times more valuable than these Chinese patents. But let's also think about a patent does not make a profit, nor does it make a company. How many companies are coming into existence? And again, here, the US has a leadership, a pole position, putting out almost 1,000 new AI companies compared to about a tenth of that coming out of China. So folks, don't get misled by the headlines. I'm not here to tell you that the US, I'm not arrogant, that the U.S. has got this in the bag, that we're going to win this race. Look, it's a horse race that leadership is changing week in and week out. But don't give in to the headlines. I want to focus you in on what matters the most in this AI race. And it's not about, is the most value going to be in the chips, or is it going to be in the platforms that deliver the AI services? I believe right now the critical investment opportunity for AI rests in power. That's right, you see it, you hear about it all the time, that the biggest bottleneck for AI growth is going to be electricity. And here, lo and behold, China is absolutely kicking our butt. If you look at the electricity generation going back from 1985 to last year, China now is producing over 10,000 terawatt hours of electricity. Now, you may be thinking, that's got to be because of solar and wind. Not so fast. China has had an explosion of electrification through solar and wind. But China also just hit a 10-year high for bringing online coal-powered power plants. So they're using everything and anything that they need, and that's the takeaway here, folks. For AI to boom, we don't need an energy transition. We need an energy addition of everything possible. Nuclear, gas, coal, oil, wind, solar, hydro, I don't know, maybe hot air coming out of politicians, anything and everything to power this boom, please. Yeah, that was a terrible one, but it's, you can run through a list in your mind and something comes up. So how do we play this? Look, this is how we play it. Last episode, there was 2 weeks between this. How dare I? We mentioned a company that actually is at the epicenter of this electricity and power grid opportunity, CORZ. And guess what? In the last 2 weeks, they've received, or rumors, that there are takeover designs coming from CoreWeave, who tried to buy them over a year ago at $5.75 a share. The stock now is trading at about $17. When we first started talking about it, it was at $11. So we're sitting on a nice, healthy 40+% gain in 2 weeks' time. Not too shabby. So this is one play to play the AI power boom. We've got two more to share with you later, but I'm going to save that for later. I don't want to give away all the goods up front, and then you guys won't listen to the end of the show. So please don't forget to chime in. We're live taking your questions, but we're moving along to the next topic in our rundown. Is it too high to fly? I mentioned in the beginning of the show that the S&P and Nasdaq just hit all-time highs, which makes many people think this is a terrible time to buy. A couple episodes ago, we shared the myth in that thinking, but sure enough, MarketWatch trotting out another misleading headline that says, you got to be warned, this is not a good time to buy when we hit new all-time highs. But look, I'm a geek, I'm a nerd. I love to dig beneath the headlines. And if I look at the data, I'll admit, if we look at not just the price levels at all-time highs, but we look at the number of companies above their 50-day moving average, that's significantly increased too, which means a lot of companies are rallying. And then if we look at the number of companies that are trading near all-time highs, well, that's where the divergence starts coming in. So yes, there are signs in the market that the S&P is overheated potentially. The advanced decline line shows that the number of companies advancing versus declining is steadily increasing, which paints a picture that every single stock in the S&P 500 is trading near all-time highs. But that's not the case. In our money chart for this rundown topic, we show you that this is the first breakout for the S&P 500 that's had the least amount of stocks out of 500 that are trading at all-time highs. In fact, it's only 22 stocks. If you look at the right side of this chart here, comparatively, the next closest or fewest number of stocks in a breakout that was trading at all-time highs was in the August 2020, the COVID boom, were 54. So what does this mean, folks? It means the biggest companies in the market, if you look at the rest of the chart here, are making up the majority of the gains. They're making the majority of the profits, but there are plenty of stocks that are not overpriced, that are not trading too richly, that are not trading too high. So that means that, yeah, new highs, no buys. Homie, don't play that. We can still buy a lot in this market. There's a tremendous value. In fact, of the 500 stocks in the S&P 500, 249 of them are not even within 10% of their all-time highs. So we have plenty of room to run for those companies that aren't at all-time highs. Now, one investment takeaway for this: don't be an indexer right now. You don't want to own the S&P 500 index if that's your only strategy, because there is a lot of frothiness in the top half of that market, right? But the bottom half, there's a lot of value. There's a tremendous value in the Mag 7 when it comes to one name. We've talked about it, Google. That's the other investment takeaway here. Trading at about 18 times forward earnings. This is an AI play. It's a big tech play. It's an all-time high play because I believe it will go back to all-time highs on the back of the AI boom and on the fact that it's not going to have any antitrust regulations go against it. There's not going to be any rulings that force Google to break up, like AT&T was forced to break up and then re-aggregated itself. So, too high to fly. Go stick that silly advice in the trash bin and keep buying and stay in this market. I didn't know where to say it. I mean, nothing appropriate anyway. Anyway, what are we going now? Back like Slim Shady? What could this possibly be? Who doesn't love a little reference to small caps? I've been early and I've been wrong, and people are still considering the fact that small caps are underperforming large caps the most in history. So it's been a terrible run for small caps. That doesn't mean they're not rising in price. It just means they're underperforming relative to large caps. And if you look at the 200 plus years of data, that's not the case. Small caps and micro caps traditionally wildly outperform large caps. So what do we make of this? Well, I'll tell you, I think we're finally at a turning point. If you look at the Russell 2000 index, it's within about 20 cents of the 200-day moving average. Don't worry about trying to decipher these charts. It's like a toddler scribbling. Here's what's important. That little scant line that's kind of making its way across the middle there, that's the 200-day moving average. You see, that's a key technical indicator and of support and resistance. So when the index trades down to it, it tends to bounce off of it like we've seen historically. And then it plummeted below it when small caps and Liberation Day happened. And then look what's happened. It's been a huge rally off the bottom. Small caps performing very admirably. If we break out above the 200-day moving average, I think we're poised for one of those 12-year runs of small cap outperformance. That's right. It's usually about a 9-year run. I think this time we're going to go stretch the records. And here's why. This week's money chart. Core principle here at the Big Skinny is stock prices ultimately are moved by earnings. If earnings keep going up, stock prices are going to go up. And look what's going on with earnings across the various U.S. indexes. So we look at the S&P 500, pretty solid. This year, last year, 10% growth. This year, looking at 7%. If you look at the Mag 7, they're going to grow earnings by about 20 plus. Moving into 2026, 14%. Now scan your eyes all the way to the far right. Our good old small caps, where big gains come in small packages. Negative 11%. Earnings growth last year, which makes sense why the small caps were down. But look what's going to happen this year. Snapback rally, back like Slim Shady, 18% growth this year, leaping to 37% next year. So folks, if small caps don't rally on the back of that, I'm going to retire and quit. Maybe I'm just going to get fired. It's just the setup is too perfect. Everyone's been just downplaying the setup and the tax situation and the tariff situation for small caps. But guess what's happening? Those obstacles keep getting obliterated, right? We're now maybe a week away from a tax and budget bill that's going to get passed and set the stage for a small cap rally in the back half of the year. So I'm going to go on the record and say, not only is energy poised to have a snapback rally in the next 6 to 12 months, but even more so and more urgently, small caps are going to do that. So please, if you disagree, chime in and tell me why. There's a lot of people out there, there's a few writers for Barron's that are regularly trashing small caps. I would love to have you come on and debate me. So let's do this. If you got any comments, put them in the chat function right now. Remember, we're streaming live every Monday at 5 p.m. We also have a newsletter. Make sure you're signed up at thebigskinny.com or scan the QR code on your screen. And now, well, there's this. Do you believe everyone deserves access to quality health care regardless of their financial situation? Well, at the Roberto Clemente Health Clinic, we, and I say we because I'm on the board of directors, make that a reality. If you don't know, the Roberto Clemente Health Clinic's a U.S.-based 501c3 nonprofit dedicated to providing affordable, compassionate medical care to the 30,000 people in the Tola coastal communities of Nicaragua. Get this, if you didn't know, Nicaragua is the second poorest country in the Western Hemisphere. Now, as a member of the board, I've seen firsthand the profound impact this clinic has on lives. It provides a full spectrum of things we just take for granted here in the U.S. I'm talking about primary care, pediatric care, urgent care, and just wellness, education, and services. Now, all donations directly support our mission, allowing us to continue offering these vital services in an area that desperately needs them. I know there's a lot of causes that beg for your attention, but please just consider learning more about what we're doing to make a difference today. You can scan the QR code on the screen or visit nikaclinic.org to learn more and consider making a donation. Together, I truly believe this, we can build a healthier, stronger community for those in need. We'll be right back.
It's a great point on AI. Do you want to buy AI stocks? Where should we be allocating our money here now to ride that wave you're expecting?
Yeah, look, I think you have to own Nvidia. If you haven't yet, you still got to own a piece of it. They're on a crash course with a $5 trillion market cap, just given their growth and market share. But I think you have to be disciplined, too. I love Alphabet here. Full disclosure, I am a shareholder, but it's the cheapest of the Mag 7 at about 18 times forward earnings versus 25 plus for all the other ones. I look at the Mag 7 as a boy band that broke up. You can't buy all 7. You got to pick 1 or 2 that you really think can outperform in the years ahead. And I think Alphabet has just been oversold because of fears over regulatory breakup. And you and I have talked about this, probably for 3-4 years, that there have been threats of breaking up big tech. It's just not going to happen. And I think Alphabet is uniquely positioned to play some catch up in the AI space.
All right, we'll watch those.
All right, welcome back to the Big Skinny with Lou Basenese. We've got a lot of ground to cover today, so I'm going to get right to it. For weeks now, we've been unveiling our top 10 AI stocks not named Nvidia. And this week, we have 2 more to share with you and maybe 1 to replace. As I mentioned in the lead-in, our number 6 pick on the list, Core Scientific, has now been rumored to be in the crosshairs of CoreWeave, which was an IPO that barely made it to market according to the headlines and is now up 335%. Yeah, we missed that one, but we're not missing Core Scientific, up about 50% since we recommended it. Now, for those of you just joining us, we have a key principle when it comes to how we're picking AI stocks. I don't believe it's just going to be the chip suppliers. It's going to be the solution providers. Core fits in that because they're providing a solution for guaranteed, dedicated AI compute space with power, right? How about these other names that we have on our list? You'll remember Teradyne and Symbotic. I want to bring up Symbotic because this is the one that makes warehouse industrial automation robots and uses AI to improve their efficiency. Guess what? Shares are up about 28% since we first profiled them here just 3 weeks ago. So our top 10 AI stocks not named Nvidia is panning out pretty well, which makes me excited to add 2 more names to the list. Now remember, AI spending across the big tech companies is going to continue unabated. If we look across from Alphabet to Meta, to Amazon, to Microsoft, they're going to spend collectively over $300 billion on AI capital investments. Now, if you look at a company like Meta, they're going to spend more, get this, on capital expenditures on AI this year than they made in net income in the last 12 months. So that puts that into perspective for you, how big the AI trend is. Now, for those of you that think that AI has taken over the world already, is smarter than humans, is going to replace us, therefore we're dead, we're not relevant anymore, think again. Humanity's last exam, which is the hardest exam, a compilation of experts from all fields and 2,500 questions, shows that AI is barely proficient. And that messed, depending on the model, only about 7 or 8%. So what's the point, Lou? Well, AI's got a lot smarter to get before we get a lot dumber in its eyes, right? We got a lot more time to play this trend. And if you want another data point to overwhelm you to believe in the staying power of AI, get this. First quarter GDP in the US was down, revised, 0.5 percentage point. But guess what? Without AI, it would have been down 1.5% because AI contributed positively a full 100 basis points, a full percentage point to growth of the entire US economy. I mean, think about that, folks. No one has this factored into their models in the back half of the year or into 2026, but they will very soon as this spending boom really kicks into high gear. So again, how do we play this? Well, we've got 2 more picks for you. But I sat down earlier today with Eric Jackson, an ace hedge fund manager who, like me, was an English major that turned into a finance bro. These guys, thus generalists that don't come up in the traditional way, start to think differently. And he's thought very differently about how to find winners in this market. While Core Scientific wasn't one of his, he has 2 other names that I want to share with you, Iren and Cypher. I'll let him do it in this interview. So listen in. Well, Eric, thanks again for joining me on short notice. This is what I love about Twitter. You can connect with people far and wide that have more expertise than yourself. How you doing today?
Doing great, Lou. Nice to meet you. Thanks for inviting me.
Yeah, let's just dive right into it, right? And we've been talking about 10 AI stocks that are not named Nvidia. Core Scientific was one of those core holdings for us. Came across the fact that it was one of your best performers in the last month as well. What's going on? I mean, from your perspective with Core, did you expect this? Was the thesis always a takeout from CoreWeave? Give me your take on that.
Sure. To be clear, I don't own it right now. I've been
Okay.
following it since the May 24, first acquisition rumors about CoreWeave looking to do something with them. So I've definitely been following them for a while. I am long like iron and cipher mining, which I know we're going to talk about.
Yeah.
But obviously, when the news broke on Thursday that CoreWeave was taking another run at Core Scientific, like that sort of electrified the whole sector. And it's pretty important what happens with Core Scientific in this deal. I think going forward for all the companies in the space, it's going to be very interesting to watch. It's going to be sort of a new benchmark
Yeah.
for
Do you think a
potentially how
deal?
all these companies should be valued.
Yeah. Do you think a deal gets done this time? I mean, do you think the market's fairly valuing what Core Scientific might have in the pipeline that we're not aware of, or what's your take on? Last time for people that aren't aware, it was a $5.75 per share offer. I think about $1 billion
Yeah.
takeout that they rejected pretty quickly.
Yeah, and I guess they were smart to do that. You could argue CoreWeave was smart, I guess, to walk away from the table too, because I mean, obviously, none of us has crystal balls, but CoreWeave now is an $80 billion company with, they quadrupled their stock price since their IPO in March, which at the time, remember, people were saying was going to be a failed IPO, and
Oh yeah.
you can pull up these like clips at the time about like how Nvidia had to step in and prop it up because it was such a terrible company and all this, and now the thing is 4x'd 4 months later or whatever it's been. So Core Weave has more like a currency to do this deal with. So in some ways it's a much easier kind of deal for them to do. So yes, I do think Lou that something's going to happen this time. The Wall Street Journal reporter Lauren Thomas, who was like kind of the lead author of that report, said
Yeah.
that something would be done in the coming weeks. And Guggenheim sent me a stat. I don't know where they got this from. That Lauren apparently has a 91% accuracy rate when she writes these kinds of M&A deal stories. So
Yeah. No,
I do think.
that's good to hear too. Lauren actually is the daughter of one of the guests we had on, Brad Thomas, who's an expert in real estate and REITs. But Lauren, definitely very savvy. Look, for full disclosure, I own a Core Scientific, so obviously I'm hoping for the deal to come to fruition. But even if it does, I mean, you talked about CoreWeave's run up, at 4x from the IPO, despite a backdrop where everyone thought it was going to flounder.
Right.
You are in Iran and Cypher, like you mentioned before. I believe you had a tweet out there saying that, look, special opportunities like Iran only come around every once in a while. You see this could be a very big play. What's the upside there? And then what differentiates it, or, why do you like it more than Core Scientific? Is it just the guaranteed power contracts that they'll bring online? That's, more scale. What are the fundamental thesis for you in that case?
Yeah, sure. So first of all, I think all these stocks, including Core Scientific, are still undervalued. So even though Core got a 33% bump up, I guess, on Thursday when this deal was announced, I mean, it's a $16 stock now.
Yeah.
And Cantor and Roth were out last week after the news broke that they both thought that a deal could be done for Core in the 30s. In fact, Roth said that CoreWeave could pay up to $38 a share for Core Scientific without it being dilutive to CoreWeave,
Right.
which is pretty phenomenal when you think. So here we are, like this thing is trading, core is trading, less than 50% of where, that kind of a number. And CoreWeave stock I think it's slightly up now from where it traded on Thursday midday when the news broke. So that
Yeah.
tells you that at the current revalue price of CoreWeave, Wall Street doesn't think that or Core Scientific, that Wall Street doesn't think CoreWeave is overpaying for this yet, and could go a lot higher. So now the reason why I like Iron and Cipher Mining versus Core Scientific, it's just basically in terms of the gigawatts that both of those two companies have under development. There's a line of sight to basically 3 gigawatts.
And that's how far out in the next 2 years, 3 years? What's the length before that all comes online?
Like late 26.
Okay.
It varies by company. I mean, I think
Yeah.
Cipher would be slightly longer than Iron, but basically, kind of, in the next year to year and a half, that's they've committed to that, and so far both companies have delivered on their commitment. So if you value like on a price per megawatt of that under development, and by the way, I think both and probably Core 2 have potential to go well past that. And I think there's going to be such demand for these AI HPC data centers that there will be an opportunity to kind of meet that excess demand beyond those 3 gigawatts each. You do the calculations, and whatever Core goes for, you can still say that Iron and Cipher and Core are still far less. Their multiples are kind of pegged to and anchored to other Bitcoin miners like Mara and Riot that don't have the opportunity to make this transition to the AI HPC space. So that's the upside here. That's a potential disconnect with where Wall Street is pricing
Yeah,
things
no,
today.
and that's how I always saw Core, is that they made a wise pivot to just get out of just the Bitcoin mining and kind of free up capacity. Do you see this as kind of I see this situation, tell me if you agree or disagree. It's really a land grab for AI compute power that has guaranteed or dedicated power to it. That's the scarcity right now. How do you see, I guess the question really, if you agree with that, is the question then becomes, do any of these smaller players like Iron and Cipher and Core remain independent, or is just a consolidation wave going to sweep them into the large hyperscalers?
I think that's gonna be a growing realization, Lou. I don't think we're there now. I think probably these people like Oracle, OpenAI, Meta, Google, CoreWeave, they probably thought hey, we can hang back, we can see how things develop. Where there's lots of dance partners here that we could potentially do deals with. But if Core is going off the table, and then the fear kind of, starts to set in that some of these other players might be off the table through an acquisition. Like that's when you could get this FOMO building and kind of like a rush. So I do agree with you 100% that I really think this is probably the most interesting niche within the whole AI complex that has really been kind of, to this point, I think massively overlooked. So everybody's talking about how there's an AI bubble, and yet Nvidia has been flat for a year now. It's finally breaking out again. And then what are the other plays besides Nvidia? Well, obviously the hyperscalers, but you're getting those more diversified businesses, great businesses, but it's not a sort of a pure AI play.
Right. It's hard to get the pure plays, like you said. Otherwise, you just buy the chip, versus now you're talking about the actual resource, the energy and the compute power. I think the next wave is probably solutions, right? Like companies that have technology that then
Palantir,
like Palantir, exactly. And then it moves down the market cap stack, right? So you got the mega caps and then into the large and mid caps, which is, I think, where you find opportunity a lot. I do want to be respectful of your time, but I do want to give you a chance too. Tell us about your strategy. I'm intrigued by your background because you're not the stereotypical finance guy, just like I'm not. You're an English major. You have a PhD in management. You were a tech operator as well. So you have a very diverse background before launching EMJ Capital. What's your investment process and strategy? Is it strictly small and mid cap? Is it long, short? Tell us what your expertise and specialty is.
Well, one of the interesting things is that I started out as sort of like a fundamental bottom up tech focused investor. That's how I started EMJ Capital. I was sort of like following the Kathy Wood kind of a model.
Yeah,
Shoot.
except with better returns, right? You don't destroy capital.
Well, I mean, I fell into some of the same traps that she did in terms of like the aftermath of 2021 and 2022, and how these growth stocks kind of cratered. Um, but through that process, like I've built up a team internally at EMJ where we're building AI models just for stock selection and for portfolio management, and that's been it's been a really eye-opening process. It's still a lot has changed just in the last 6 months because
Yeah.
just with the advent of DeepSeek and a lot of open source models that specifically became available, more geared towards financial modeling. It's kind of like a chef who suddenly got a higher, much higher efficiency stove to work with. Still got to come
Right.
up with the right ingredients. You got to know how to put the
Right.
ingredients together to make something that's really interesting. But there's no question like things have gotten a lot easier with the with a bigger stove rather than chopping firewood in the back and doing it
Yeah.
over the fire. So. But so we're building these models. It's giving us a lot of good insights. It's giving a lot of some of the best models we've built are more crypto focused,
Okay.
Bitcoin, Ethereum, and that sort of made me interested in the companies like Core and Iron and names like Iron and Cipher actually all got flagged by our AI model. But there's
Interesting.
another piece of my background was that, like, I don't know, 15 years ago, I ran an activist campaign before I even had a hedge fund against Yahoo. And this was like in the days
Love it.
YouTube and Facebook were just getting started.
Yeah.
And nobody knew me. I was a management consultant at the time. Nobody knew me from Adam. But, you had these blogs, you had, wikis and stuff. So, I didn't have a hedge fund, but I put together the starts of a turnaround plan for Yahoo. You put it on a blog, put it on, did a YouTube video and all this, suddenly got this sort of like mass following and supporters and fellow shareholders who are also frustrated with Yahoo and wanted to kind of pitch in and using kind of all the tools of social media and stuff at the time. So and because it was new and different, it kind of got some press attention too. So um, this whole Iron thing and Cipher just in the last couple of weeks, I mean, like I've kind of been beating the drum for both stocks on Twitter,
Yeah.
and I didn't realize like there's huge army of like
Oh,
fans
absolutely.
and
Look,
followers.
if you
Um,
tap into that vein of crypto and AI, it's got two different, very entrenched camps that come out of the woodwork. So, yeah, it's since we started interacting, I think I probably picked up 200 followers from mostly crypto guys. So, um, it's interesting. So, do you run? Last question before I let you go is: do you run more of a concentrated portfolio? I mean, how do you look at kind of position sizing? Are you swinging for the fences in 7 or 8 different names? Or are you more
um,
diversified, short, hedging risk?
Well, so it is more concentrated, and like to go back to the Kathy Wood comment. I mean, one of the things that I've been successful with is just in recently is sort of identifying kind of young, small, kind of at least for a broader audience, like unknown names, and sort of calling attention to them. So our AI model found Carvana in like May of 24, I believe it was, and the time it was trading at $15, and I was kind of scratching my head because or I think it was May 23, so because they were coming out of the they'd gone down, they went from like $400 a share down to
Yeah, yeah,
three
yeah.
bucks and stuff, and like they're on death's door and all this kind of stuff. And I was like, is this AI model right? But it ended up, obviously like a huge turnaround, one of the biggest turnarounds ever. I've come across other lesser known companies, but interesting companies like DeFi Technologies, which traded up in Canada, but on the OTC and Nasdaq, and then or on the OTC and then just recently uplisted to Nasdaq, doing ETFs in Europe in the kind of crypto space. And then I found a company called BTQ Technologies when it was just, I think, a $30 million stock
Oh,
last
wow.
December. But it's in the quantum space. Just as sort of like we're coming out of in Trump getting elected, and
Yep.
the
All
focus on
those stocks.
crypto and stuff, and now it's gone up like 27 times, I guess, like since I initially kind of called it out. So I'm calling out. And I've said this in tweets that I think Iron and Cypher, are going to be kind of like two of the next big things. I mean, I at least see both 10xing over the next 18 months from here. Hopefully they can best the 27x return of BTQ, but we'll see. They've got enormous potential. It's obviously a critical space. It's sort of an overlooked space. This compute and having the power connects is going to be critically important. So well,
listen, I don't think there's a better place than to leave it on that, with the fact that maybe they could go 10x or 27x.
All right, we're back. The Big Skinny with Lou Basenese. I really appreciate Eric Jackson's time today. Go check him out on Twitter. Check out his hedge fund if you're looking for a highly concentrated, contrarian, tech-oriented angle to run your investments. But I want to say this. Look, it's really simple. The thesis on Core Scientific, IREN, as well as Cypher, which he mentioned. For OpenAI to scale, they need CoreWeave. For CoreWeave to scale, they need Core Scientific and others. And why buy the mega cap or private companies, which you can't, when you can buy the small caps that are providing the critical resources? So that's the investment case for all those. We haven't replaced Core Scientific yet, but I imagine we're going to come back here one Monday, maybe next Monday, and it'll have a takeover offer on the table, at which point we may replace it with IREN. I got to go home and do some more research. So stay tuned for that. But what I don't have to do more research on is the next two stocks that we're adding to our top 10 list of AI stocks not named Nvidia. The first is an oddity, pun intended. The name is Oddity. It uses AI to discover new healthcare products. I know this sounds completely off the wall, but it fits our strategy. It's about a $4 billion market cap company that's launched one of the best performing Il Mariage, I believe is the name. I can't pronounce. I'm not good with foreign languages. That's where my wife's really good. But so they've used AI to figure out consumer preferences and develop the right products, and it's one of the best-selling brands out there. They have two other brands right now, as well as a pharmaceutical division that is finding small molecules, which from previous episodes, I think is a great use case for AI, drug discovery and development. So Oddity is coming out with the next platform for this product launch for AI. It's happening in the next 3 months or so. Could be a huge catalyst for the stock. You see it here in the past year, almost doubling. Again, when we talk about Nvidia at $3 trillion, this is a company at $4 billion. There's a lot of room to run. What's the eighth and almost final company we're adding to our top 10 list? Well, it's one you probably know already. It's Gain Therapeutics. This is a company that is using AI and machine learning to discover drugs that can be used to treat rare diseases, autoimmune diseases. And specifically, Gain is targeting Parkinson's disease. They have a drug that's in a phase 1 trial and a data readout that's coming very shortly that could demonstrate, like the preclinical models did, that not only do they arrest the development of Parkinson's, but they possibly reverse it. Now, again, Michael J. Fox Foundation and many others are investors here. Obviously, the implications of that successful type of data will be huge. There's a report out just recently from Societe Generale that calls this. There's room for this unicorn to run ahead of their July readout. They've got a price target on here of $12. This is a $2 stock going to 12. That's the potential that exists in AI, but AI plus biotech. So take a look at it. Do your diligence. I'm a shareholder of all of these stocks that we've named. With that, here's the rundown on all of them in case you forgot. If you don't have time to write quickly or don't know how to pause and rewind, you're of my generation here. The younger generation's got this under control. Scan the QR code on the screen or go to our website, thebigskinny.com. You'll get our report once the last two picks are added to it. With that being said, we're going to take a quick break before we bring on our next two guests who have some interesting revelations about the leader the investor's perception of the leader in the humanoid robot space. So we'll be right back.
Lou Basenese with me. You've got the, how does the US win in AI? That's my question.
Yeah, keep innovating, stop regulating. We're talking about this AI regulation. You can't overreach in the government. The US has been a leader in AI, even though China wants to say that they are. If you look at patent filings, China's filed a lot of junk patents, about 13,000 last year. The US is about 8,600. but the US patents are being cited more than 7 times as much as the China patents, which shows that they're high quality. Everyone else is citing them like academic research. No one's citing the Chinese patents.
Are they getting hurt because they can't get the good chips?
Yes, this is actually exclusive today from the information coming out saying DeepSeek version 2, known as R2, is going to be delayed and may not scale up as quickly because of the April ban on the H20 chips from Nvidia.
So Nvidia seems to have real momentum.
They do.
I don't know whether you're in it or out of it.
No, I'm in it. I was late to the party, but hey, I can still enjoy the party even being late. I think it's got great momentum both in the business and you're seeing it in the stock market, hitting new highs yesterday, another new high today. I think this is on a trajectory to $200 per share, which would put it almost at $5 trillion market cap.
Jeez, it's 3.8 trillion now, by the way.
Yep. 200
billion more valuable than Microsoft.
Yeah, it's and going higher from here. I think you resolve the risks that were existing in the world. The next big one is the tax bill getting passed. After that, you've got free room to run in the back half of the year. I think this is going to be one of the big winners yet again, defying all odds, including mine as a latecomer here.
Welcome back. This is the part of the show where I just get excited because there's interesting information and there's two guys I really respect and know, and I'm getting to reconnect with some friends and former colleagues. So at this point, I want to welcome in the two executives from PatentVest, which you're going to learn all about. Will Rosellini, the Chief IP Officer, and Javier Chamorro. I tried to roll my R's as best I could, my friend. You're going to have to help me with that, but you're going to have to help us with understanding the patent landscape when it comes to humanoid robots. I thought Tesla was a leader, but tell me, you guys have a new report out that says absolutely not. So what's the big finding?
So first, just so everyone knows, the way that we build these reports is that we have a proprietary IP database that we use to research technology spaces. And in the database, we have 165 million documents, which are patent publications from around the world that we screen to identify who the players are in a space, what they're doing, and how the technology that they're developing relates to what we're looking for. So in this space, I just wanted to highlight that there are over 1 million patent documents around the world that talk about robots.
Wow.
And when you relate that to humanoid robots, we found and screened almost 21,000 patent documents and 11,000 patent families. So there is an enormous amount of information out there. Companies are investing a lot of money in this space. We screened almost 2,000 companies in 41 jurisdictions around the world.
And how long did it take you guys to do this? I mean, I want to paint a picture for people for how powerful the PatentVest platform is.
Well, the report itself, because of the level of research that we had to do, took several weeks of work, and it took a good amount of resources from our analyst team that we have trained in IP research, and also from our Chief IP Officer, Will, and others in the organization. But the process itself for specific technology spaces can be run pretty quickly. We have a process that allows us to understand a space in a matter of hours, if not days, and allows us to derive insights into what is happening in each space.
And so this is actual trained professionals yourselves that have expertise in evaluating new technologies, understanding those landscapes. We just put a chart up on the screen showing who the unexpected leaders are. Why don't you share a little bit more about the findings, right? Like I look in the middle here and investors are clamoring to own Tesla because it's going to be the leader of these new humanoid robots, and they've only got 16 patent publications here versus Sanctuary AI at, gosh, 277. So I mean, totally getting eclipsed by a private company that most investors have probably never heard of.
Yeah, so we think about new market entrants and emerging technologies with a sort of patent first understanding for two reasons. One, deep tech requires a fundamental leadership position with patents because it's so difficult to get it right on the first time. So having a fundamental leadership position with your IP allows you to take numerous shots on goal without infringing, number one, and number two, being able to raise capital in the future to support those market adoption lessons that you'll learn in early days. What we found, first off, is there's converging catalysts into why now for humanoid robotics. The first is robotics really is embodied AI. So we had LLMs, that was a couple of years ago. Now we're moving into agentic protocols, and that's really accelerating. But eventually you'll see AI being embodied in the hardware. Number two, material and actuator costs are falling. And so you can get a sort of mid-level spec humanoid robot for about $150,000.
That's
it?
A price just 150 grand?
Yeah. Well, that's a price point that if you think about it, in terms of replacing manual labor and people, that there's a return on investment there that's starting to make a lot of sense.
Yeah. Do you see
and
this?
And then lastly,
Will, do you see this, just let me focus on the cost point a little bit, because I think it's important, right? Frame of reference. 3D printing, when it started to become a boom, like the biggest 3D printers early stage were right around that same price point, 125 to 150 grand. Within a matter of years, they came down to consumer-based ones that were under $1,000. Do you see a similar, again, not down in absolute terms, but in terms of percentage declines possible for humanoid robots?
Yeah, Morgan Stanley did a list of 100 public companies that are focusing on the supply chain, sensors, batteries, semiconductors, integrators, and they're playing it like the Levi's jeans of the gold rush to start to integrate within these humanoid robotics. And so I do see the cost coming down substantially. The second piece on that is why humanoid versus other forms of robots? Well, the world has been built around human arms, legs, hands, and feet. And so a lot of the infrastructure is already built for humans to navigate. When we looked at what people were doing, we were surprised by a couple of things. One, people that had raised, or companies that had raised lots of money at high valuations, have done so on promise and visibility of the story, versus companies that like Sanctuary AI, that have a lot of fundamental proof of principle demonstrations, and they have a leading patent position. And so it's pretty easy to differentiate who we think are going to be the leaders in 5 years once the hype kind of settles. When we looked at how to sort of allocate where things were being patented and why they were important, there's quite a bit within the humanoid stack that we could look at. There's sort of the brain, where we've got reasoning, motion planning, control elements. And then there's the body with mechanical design, actuators, mobility elements. And so when you look at where people's strategy is in terms of companies looking to develop these, they should have an integrated strategy along the promise, the market fit in terms of the unmet need that they're solving, and the patents that they're filing and getting issued. You can't get issued patents unless you have data showing that you brought this into an invention. And so there might be a gap in the number of patents issued based on the progress of the company actually generating meaningful data.
Yeah, that makes sense. This is all interesting because I think a lot of these details get lost in the investment hype. I mean, you talked about it, that they're raising a ton of money on the promise and the potential, but not necessarily having the IP to back it up. I want to make sure we always run out of time. One, want to invite you guys back, but two, I want to make sure everyone can read the insights in your report, the humanoid robotic report, the disconnect that's happening between funding and IP. We have a QR code that we put on the screen. You can go to patentvest.com into the reports tab. There you'll also find a lot of other reports breaking down other key tech trends, which is your guys' specialty. I want to leave the last word to you, Javier. How can people reach out to you, and what are some things you're looking at on the horizon in terms of new reports and new technologies that you think are really going to be important for investors?
Well, we're already starting to work, and we'll soon publish a follow-on report to this one on surgical robotics, which we think is an important field that's emerging alongside this one and complements it, obviously. So we are going to be publishing that in the next couple of weeks. I encourage people to visit our website, and you can register there for an advanced distribution list that we have on these reports. And then we're actually publishing now on our social media accounts polls to identify topics that we find, or to screen topics with the audience that we find interesting and we believe could have be of interest to our clients and our readers. And so we're asking their opinion too. So follow us on LinkedIn and on X, and you'll be able to provide your opinion on those.
Awesome. I just wrote a ChatGPT bot that's going to go on and vote for the text that I want and just flood the system and overwhelm it. So now.
Thanks, Lou.
Yeah. Listen, guys, I always appreciate your time. I appreciate your patience. We had an overpacked episode today, but we want to have you back get some more insights from you, and just want to have everyone go ahead, check out the website, patentvest.com, check out the reports, and as Javier mentioned, find them on LinkedIn to weigh in on the next tech trends that you'd like them to look at from their unique perspective. Can say this after having worked with them at MDB Capital, that there is not any other firm that I'm aware of out there doing the same type of content and research production that they're doing, both for investors and for companies. So check out PatentVest. Javier, Will, thank you again for your time. We're going to keep moving along here with the big skinny before we run out of time. Folks, it's a shame, right? I'm a geek. I get curious, forever curious, right? Don't be judgmental, be curious. I could dig in and spend hours with them about the insights about humanoid robots and brain-computer interfaces and cardiac care and the algorithms that are going to detect heart attacks. All that data and more is available in their reports. They don't cost anything. It gives you great insights. So I'm going to have them back on to talk about some of the latest and greatest. But right now, we're going to the Dodd man himself to cover, well, we got the high five and some other topics, and we actually left ourselves with about 8 minutes today. So I'm going to shut up for a second, and maybe you got something to say, because, you know, this is, yeah, 8 minutes, man. This is like gold for you, because this is the time of the show where you wind me back and say, hey, man, this didn't make sense. You were going too fast. This was really important. You want to focus people's attention on some areas of the show, so I'm going to let you do it, man, or make fun of me. I mean, that's also the part of the show.
Well, making fun of you, Lou, is just a sport. That happens no matter what we're talking about. But no, I want to say, man, you look really sharp today. Everything, you know, and you're crushing it. You know, how do we know you're not a humanoid robot? You got any proof there?
Question, Dodd. Yeah, there's a glitch in the system. No, man, I dressed up today. We did some media appearances, so it happens. And I forgot to pack a casual Lou shirt for the big skinny, because we like to have things a bit more casually here. There'll be a day and time in our future where we shoot this from an undisclosed location that might be a little bit more laid back and relaxing. There's
nice. I'm looking forward to that. I hope it's a Skinny Beach that we're talking about.
Nah, man, we're talking about the big skinny bar maybe, or I don't know, cigar lounge, or who knows. Like we have dreams. That's right. What are we talking about? This is the time of the show where we always go down and say, hey, what did we get right? What did we get wrong? Which
well, I can't say you got something wrong.
It's high five time, dude.
It's high five time.
We got 5 minutes to go. Can we do it in a minute each?
All right.
Hey, here's another cool thing. My battery is about to die on my computer, so this is usually the time of the show where I forget what we're supposed to talk about. There's a really good chance I'm going to do that again, so you're going to have to fill in, brother.
Call to come back. Take your victory lap, brother. I know what this is about. Market's coming back, launching like SpaceX without the explosion, right?
Yeah, wow, man. Look, we took a lot of heat. We launched this show into basically the teeth like 2-3 weeks before the markets just fell off the cliff, and we came out swinging, saying don't buy into the nonsense that this is the start of a bear market. I think one of our first newsletter posts was top 10 reasons we're not in a bear market. We told everyone to buy, and man, that could have ended spectacularly wrong. But here we are. Markets bounce back very quickly, which they tend to do. We shared that in previous episodes, where sometimes the worst days in the market are quickly followed by the best. We had an April 4th sell-off for Liberation Day, and April 9th was one of the top 10 best days ever. So, yeah, we got to high-five ourselves when we get it right. We got that one right, brother, so appreciate it.
Mental health reset, yes, please. Don't know what this one's about.
Listen, new studies out of Stanford. I think this is cutting edge. Look, we bring a diversity of viewpoints in here. I always encourage people to fight confirmation bias by seeking out new information. This comes out of Stanford University, showing the effect of deactivating Facebook and Instagram on your emotional state. This is leading up to the election. Folks, this is just simply getting them off of your phone, not changing the amount of time you spend on your phone, and you see a dramatic increase in happiness, a decrease in depression, anxiety, your emotional state index goes up. This is huge. And I bring this up because I just recently deleted Instagram from my phone because I just don't want to just randomly scroll sometimes. I still do that on X, but that's research, that's work. Instagram is not. But I bring this all up too because if you are a parent of teenage kids, particularly females, There's a great podcast from Lex Friedman with Jonathan Haidt, The Case Against Social Media. Great data in there, just things to be aware of. But this, for me, drove home the point for even for us as adults, not to get sucked into these machines too often, right? There's a lot. There's my beautiful bride. Yeah, look at that. Not planned. I just got points and then took them away by saying I got points. So anyway, mental health reset, do it. It's good for you. The data backs it up. Check out the data for yourself.
All right, man. Good stuff. Short New York. I know what this is about.
It's not a short army of Lou's running around.
Is this a new Lou Basenese show? Short New York? And
Yeah.
are you moonlighting on me?
Yeah,
Come on.
look, the big skinny, you are the big and the big skinny, so it's a good thing that we're not standing next to each other because, I'd have to be on a riser or something. No, listen, I'm not political, but like when socialism becomes popular, well, it's not even popular. Look at this. This is searches on Google Trends in the New York area after the Democratic primary election, after they voted for a socialist, right? Well, let's figure out what that means. Now, in reality, if you dig into the data, it's emerging. Only about 5% of registered voters in New York actually voted in this election. Only about 14% of registered Democrats. So you really didn't have much turnout, but this is the problem with politics, right? The minority can rule the majority if the majority doesn't show up to vote. So I don't know if it was apathy about the other candidates, but man, this is a really scary prospect. Gonna make a prediction here. No way in hell he wins because there's gonna be a sea of capital coming out to fight him, particularly from the commercial real estate market. Socialism would not fly in the center of capitalism.
Heard it here first, right?
That's right.
All right. Silly Rabbit. This has got to be either about a breakfast cereal or another Slim Shady reference.
No, man. Silly Rabbit, tricks are for kids, and tariff tantrums are for kids, too. Remember all the tariff talk and worries about inflation that was going to be caused by it, and yet we haven't seen any of it. It was going to trash the earnings prospects for S&P 500 companies. If you actually look, the latest data from FactSet shows that earnings guidance from S&P 500 companies has been positively revised for the second quarter by the most in a long time. 51 companies coming out and saying we expect better earnings in the second quarter. Now, keep in mind, this is significant because S&P 500 it doesn't generate 100% of its revenue from the US. Actually, about 41% of revenue for S&P 500 companies comes from overseas. So no tariff impact in sight. Jerome Powell's waiting for it to cut interest rates. I don't think he's going to get the data to back it up. So I think finally we might get a Fed rate cut. It's September, maybe, not July.
No.
Yep.
I know someone is going to be happy.
That's right.
Hot.
President Trump.
Someone's going to be happy finally. Hot Crazy Matrix. Best video ever. Best video ever. It's got to be about that, right? I hope you found a unicorn.
I don't know what you're talking about. I'm going to feign ignorance here. Yeah. If it's a unicorn, capture it and bring it in for studies. No, this is the tech stock hot crazy matrix. If you look at some of the biggest tech stocks and stratify them, not on hot and crazy scale, but actually on earnings growth and valuation, you got to be hot and crazy to invest in certain ways. So this is just proving my point that Google, Alphabet, all these tech companies changing their name, Meta, Feta, Facebook, I can't do it, man. It just messes with my mind. If you look at Google, 10% double-digit earnings growth rate anticipated, revenue growth, and then their price to earnings ratio is at the lower end at about 18 times. So this is the hot, crazy matrix for big tech investments. Buy high on revenue growth and low on valuation, or kind of like in that sweet spot. You can live here all day long between Google and TSMC. You get into the Nvidias in the world and she's gonna leave you behind. So that's all I got for this week. Unless we got a final parting comment.
With the hot crazy matrix, do you?
No.
Future episode, Lou's X's hot crazy matrix.
Hey, and we're going to end on that note right there with my friend who's never going to be welcome on the show again. Nah, just kidding, man. Listen, folks, we appreciate you tuning in. We're out of time, but we're never out of thoughts, and we're never out of time for your comments. So please don't hesitate to chime in on socials, to find us on our newsletter, thebigskinny.com, and we will be back next Monday, 5 p.m. live from Brooklyn, bringing you the latest and greatest. Enjoy your 4th of July holiday, and we'll see you next week. It's Lou Basenese signing off. Dan the Man with the audio, too.